Hello, just testing the mic.
You sound absolutely marvelous.
Perfect.
Okay, I got some more people come in. Hey guys, welcome, welcome. Share the space, please. What's going on, man? How you doing?
I'm good. Just getting over my FOMO for missing you guys at Vegas.
Yeah, dude. Okay, so got a little bit of a story for you, bro. For those who don't know, Kenton was nice enough to give me his ticket for BTC Las Vegas. It's not really a give. I owe him a massive steak dinner, which I will be honoring.
And
But
Coke and hookers.
there you go, cooking hookers and steak all at the same time, right? Very important. So I show up at BTC Las Vegas. I did not know that JD Vance was going to be there the day that I was checking in. Okay, so so I'm in line, and then I'm thinking to my head, I'm like, wait a minute, maybe is this really a good idea? Like, because guys, like JD Vance wasn't in the same room as me. And for those who don't know, that's obviously the vice president. He's like hundreds of feet away from me. He's not in the same room, but it's like stupidly close. And I'm like, is it smart to go under the different identity of someone with my ticket? Like, you know? And so I'm walking, I'm like, I don't know if I should do this. But then I'm like, you know what? The hell with it. I'm gonna do it. So I go up, Kenton. I go to the lady, right? She looks at me and I'm totally calm, and she says, all right, what's your name? And I look her square in the eye, bro. I'm like, my name is Kenton. Kenton Ralph Toes. Fucking charisma, buddy. Gave me that thing, no problem, no problem. And then I carried on. So I
Are
showed
you
some great
serious?
grace.
That true story?
That's damn true, man. Yeah,
That's
freaking.
awesome. Sweet. I love it.
I was nervous. I'm not gonna lie,
Did you
but I
talk to
pulled it
him?
off. No, I didn't talk to JD Vance. He was on
Oh,
a he did a speech space, but he was, dude. I mean, there was so much security there when you pull into the Venetian. It was crazy. It was crazy. So, but that was fun. I had a great time, man. So, hey, we got to meet next time, okay?
for sure, 100%. Well, they
Okay,
have free.
guys.
They do free tickets. Hey, I got a free ticket. I don't know if anybody else saw that for the next year. They did some
Oh,
promo. Check your
oh,
emails, guys, from the conference. I got a free ticket for next year.
damn.
I don't know if it's limited time or if that's what, or if it's, they're going to do that now going forward. I don't know. Yeah,
Well, there you go, guys. Make sure to
yeah,
check your emails. Maybe you've got some free tickets. Okay, guys. One last reminder to the share the space. We're going to get started here. We're going to be talking about liquidity today. Now, I'm going to go through introductions, and because everyone's position on, from their reference is unique. Everyone looks like they're close to me. I'm just going to go from left to right for introductions on people. So for those who don't know, in case no one knows me, I'm Patriot Sounds. I'm a moderator. I'm an educator for THORChain. I do various spaces and a bunch of different content. And I've been doing this since 2021 now, and I love every minute of it. We're going to go to Pragmatic Monkey. Como se va, mon ami? Go ahead and introduce
Ça va
yourself.
bien, merci. Hello, everyone. So yeah, I'm Pragmatic Monkey. I'm now mostly part of the Rujira team, trying to really get things moving on the app layer, and that's where I spent most of my time. But I used to be one of the key contributor to Liquity before that, when it was still MantaDAO. So I obviously know the guys very well. I'm still involved there as well, and there are tremendous synergies between Rujira and Liquidy. So I think it makes a ton of sense to have this space today and get the THORChain community to learn a bit more about what can be done with the DAO tooling we will have on Rujira, and hopefully even inspire others potentially to launch similar initiatives, because it's not a zero-sum game. The more we do that, the more it benefits for the app players, and the more liquidity we add overall, and the more volumes we can facilitate on Ruji trade order book, and the more fees for both Ruji stackers and THORChain based layer.
Perfect. Awesome. We're going to move on now to PostTenebras. I'm sorry if I said your name correctly. Go ahead and give us an introduction.
Yeah, no, that's perfect. Thanks for having us on. PostTenebras here. Everyone calls me PT. That's easier. Yeah, I just so me personally, I've been kind of involved with Kujira, now Rujira, since they relaunched since the Terra days. So actually, was a fan of them back in the Terra days. Obviously, everything imploded back then, and they were it was sort of like a scattering event, and so Kujira went and launched their own chain, and I've been pretty active with them since day one when they launched. Very excited about it. Now they're moving over to THORChain, so obviously lots of stuff happening. And essentially, I've since MantaDAO, which is now Liquity DAO, the new rebranding since MantaDAO launched, I've also been involved with them since day one. I'm kind of proud to boast that I was the lowest buyer as far as the price of Manta on Fin. I bought it at 5 cents on day one when it launched. So I think that's the lowest price that it ever traded. So yeah, I've been pretty involved with MantaDAO since day one, and Kujira since day one when they launched. And yeah, really excited to be pushing this forward, and we can talk about exactly what the rebranded MantaDAO, now Liquity, Liquity Finance, is going to be bringing for Rujira and THORChain.
Excellent. That was great. Thank you. We're going to keep moving on from my perspective here. I got the liquidity profile next. Go ahead and give us an introduction, please.
Yeah. Hello, this is Jan Devman is the name I use in the community. So basically I'm a community member as well, and I was a little bit of a late bloomer. I didn't join the MantaDAO until a few months after the launch. But I've been an active community member since the inception, essentially, and really drawn to what we are doing and trying to actually run a profitable financial business online in total transparency. So we're going to dig deeper into that. But the short story, I mean, I've been basically full-time into crypto since 2019 or so, doing mostly anything you can think of in DeFi, testing everything, and Liquity DAO is really pushing the boundaries. So I'm really excited to be here today and let you know more about that.
Excellent, excellent. And last but certainly not least, my co-host Kenton. Go ahead and give us an introduction, my friend.
So yeah, my name is Kenton of Toes. I have a fund that sole mandate is to invest in Rune and run nodes on THORChain. And so yeah, I'm a node operator on THORChain. If you got any Rune, you want to bond it, reach out to me. And I also rent my name out for people to use at conferences. So yeah, there you go.
He certainly does. And for those who don't know, I also bond with Kenton, and he works with Liquify. And I met some of those guys, by the way, Kenton. Excellent team. Very, very responsive, very competent. I could not be happier being bonded with Kenton. So he is a very good node operator, guys. So just to show him a little bit there. Okay, guys, so let's get this started. I'm going to ask the setup question here, and then we're just going to have a free-flowing conversation. I'm going to extend this to the liquidity profile. So what is liquidity? What does it do exactly? And why is it significant? The floor is yours.
Yeah, I'll take it from the beginning. So let's start. I don't know how familiar people are with DAO, essentially. I mean, the decentralized autonomous organization. We are running a business entity, so to say, online. All the treasures we have are voted on. So if you want to spend something, it is a community vote. Staked tokens gives you the voting right equivalent to your staked amount. So it is essentially a truly online business that we are running together as a community. So I'm just a community member as anybody else. There's no people on the payroll or anything. We are running a really lean business entity. And what we try to do is doing market making is our primarily source of income. So we are providing liquidity. Now it's gone into the Liquity is providing liquidity on the Fin order books. So that's what we've been doing. We started out 2 years ago, pretty much, a little bit longer, So we've been running on Rujira for about 2 years, providing liquidity as the main source of revenue for the DAO. And this is what we will be bringing to the table now on Rujira as well. So we will be having around $1 million US equivalent of capital that we will be deploying on the Fin order book to bootstrap them and ensure and try to help the community as much as possible to, on one side, earn money for our share or token holders, and to be a good community member and bring the boat or raise the boat for everybody. I mean, it's going to be the better liquidity we can have on the order book, the better the user experience is going to be for the users. So that's the main revenue stream we've had. And aside from that, we've also had a swap router, which is essentially, since we have an order book, I mean, you have to trade between one pair is just 2 tokens. So what we have as well is a swap router that is the logic, so you can essentially swap in a single transaction from any token A to any token B, and it finds the best path possible. So you can jump between 5 different Rujira trading pairs to find the best route to go from token A to token B. And it's even more advanced than that. You can even split the routes. So you can go up to 3 different routes on a single swap. So those 2 legs are the main things that we operate on and making revenue on. And we've been profitable since day one, since we have very few expenses. Nobody on the payroll. All the revenue is trickling in as profit, more or less. If that makes sense.
Yeah, absolutely. Go ahead, Kenton.
I have a question. The $1 million, whose money is that? Where does that come from?
That is the DAO owning. So from the birth of the DAO, so to say, the first tokens was actually airdropped to the Rujira stakers. And in the early days, there were no money in the treasury. So it has been building up. We have been selling tokens. We have been selling bonds. We've been using all the tool sets that the Rujira will be bringing to the table. So we've been raising money. We have been doing token deals with different projects, something that we did do to raise funds and having liquidity on the books. And I don't think we will do again because it was not the best venture. But like that, we have been building up and doing revenue. I can share numbers with you. We were really profitable back in the days when things were going good on Rujira.
So you launched a token and sold tokens into the secondary market and just accumulated money that way.
And did treasury or token swap deals. So I mean, with Osmosis, for example, we did an equal share. So we swapped tokens with another, providing that as liquidity. So they were providing it on Osmosis. We were providing Osmo token liquidity on Rujira. So we did those kind of deals essentially. I mean, so without having to raise funds, so to say, we were doing token swap deals. And
yeah, if
based
I could just,
on that, we can make revenue.
If I could just jump in and add here, I think, so like, this is what I tell people. This is the easiest way to really boil it down on how Liquidy DAO works financially. You guys all know the popularity now of these Bitcoin treasury companies, popularized by like MicroStrategy and so on. So the core thesis with how those companies work, and this is on the TradFi side, basically they do capital raises, they buy blue chip assets. These are Bitcoin treasury companies, so they're buying Bitcoin, and then they're increasing the NAV, the net asset value that is held on the books of those companies, and that increases their market perceived valuation, right? It trades above a 1x price to book ratio because there's perceived growth of those companies. So the stock price trades at a premium. They do more capital raises, they buy more Bitcoin, and they just keep rinsing and repeating. And as long as the underlying asset performs well, and as long as they can continue, with the growth prospects that the market is valuing them at a premium, they can continue just rinsing and repeating, doing these raises, buying more Bitcoin and so on. So Liquity DAO is kind of like a decentralized spin on that, except for us, instead of just buying and holding, quite frankly, unproductive Bitcoin, we buy Bitcoin, we buy Ethereum, and then we market make with it. So we put it to work, and we earn trading profits by market making with it, paired to anything, paired to USDC or paired to Bitcoin and ETH. So we make sure that there are profitable trading pairs on assets that the DAO wants to hold long term, and then that basically increases the valuation of the governance token, which is Liquity. And that allows us to do even more capital raises to buy more blue chip assets and market make with those and make even more profits and just kind of rinse and repeat. So we've been able to amass, it's over $1 million now, largely from doing capital raises and doing bond auctions and things like that. But actually at the height of Rujira, back when Kuji was trading at like $5 and there was a ton of activity, I think MantaDAO, which is what Liquity DAO used to be, had well over half of all of the liquidity on Fin, and I think we hit just shy of 10 million total liquidity. Now the problem with that is that actually at the time, just like everyone was sort of thinking how the cycle would proceed, that alts would not be obliterated. So we had almost everything paired against the Manta token. It's sort of similar to how Rune operates. So when everything nosedived, that sort of reflexively decreased the amount of liquidity that we owned. So we're kind of taking a new strategy for the launch on THORChain. We're going to be focused on decoupling the treasury liquidity that we provide from the Liquity token. So we're gonna aim to, I'm kind of ballparking, we want to keep it less than 10% directly coupled to our treasury liquidity. But those are kind of the details. The general gist of it, though, is that we do capital raises. We use the proceeds from those capital raises to buy blue chip assets or any other suitable investment that we think is going to generate revenue and price appreciation for the treasury of the DAO. And then that increases the market perceived value. We use that revenue dynamically. It's completely governed by the token holders. And so, yeah, at higher and higher valuations, we can raise more capital and continue increasing the NAV for the token holders.
Okay, cool.
Just to give some ballpark numbers as well. I mean, like PT said, I mean, at the height when we had the most liquidity on Rujira, we were actually making around $300,000 a month on revenue. So that's just giving a ballpark what's possible. That was the peak value. We did between 50 and 80 months on month when the market were a bit more normal. So I mean, the market potential is huge in this. Just to give some ballpark numbers.
Okay, cool. So the money is, you're trading on your own behalf. You guys are on behalf of the DAO. The DAO is they're profit oriented. And then the token holders of the DAO can contribute, can participate in that upside by holding the tokens of Liquity.
Yeah, exactly.
Okay.
So I mean, and contribute. I mean, having new ideas, we can make new revenue streams. We can do whatever we want. So it's a dynamic community where we find online revenue streams to make the pie grow, essentially.
Got it. Because sometimes when you hear market making, people might think like Coinbase, for example, you gotta, they're gonna do some market making for your token, but you have to give them, 5% of your token supply for free. And then they go and, provide liquidity and stuff like that. But they're just dumping on you.
Yeah, exactly. And that's not the game we are playing. We are providing our own liquidity. I mean, it's our own treasury we are putting up for us to make profit on it.
Yeah.
So it's exactly like PT said. I mean, we try to be an active player in the field and making revenue of our treasury. instead of just holding it, sitting idle. So we are all for raising the trading volume. We see peak hours. I mean, we have 10 times the revenue on the peak hours when trading volume is high. So our goal is to get as much activity as possible on chain, because that's what we make money on.
Now you're saying you're market making. What's the difference between market making and arbitrage? Are you guys doing arbitrage as well, or no? It's two different things.
Let me clarify on that. So it's when we talk about market making, we talk about on-chain market making. Okay, so I'm going to take a step back and describe to you the unique architecture of Ruji trades and Ruji pools. So when you provide liquidity so first, what we call market making on chain, it just means like providing liquidity with a pair of tokens and generate a yield on that by allowing other people to trade in the pool where you provided liquidity. That's the same way it works on THORChain, except on THORChain, all the pools are paired with on Rujira. The way it works is, so in DeFi, generally, most of the DEX are IMM DEX. It's one and same thing. So on Uniswap, when there is no differentiation between the IMM and the DEX. When you provide liquidity in a pair, usually it's let's say it's a Uni V3 pair, then you will have to set a range, but effectively everybody is in the same pool with the same strategy, and price is distributed around a given bonding curve, and there is no way to express things differently. I mean, with V3 you can a bit because you can define your range, but let's say with a V2 pool, XYK, everybody's on the same XYK bonding curve, and you have no expressivity. And that's exactly also how base layer pool on THORChain works. Base layer pool on THORChain are XYK pool with a little twist, which is like this dynamic liquidity fee, which make like instead of having a set fee on trades, the higher your price impact, so the higher the size of your trade relative to the liquidity in the pool, the higher the slippage, the fee you pay. On Rujira, we have a different architecture. We separated the DEX, which we called Ruji Trade, which is very much just the order book. Is almost like an instant matching engine where people can put either limit orders to add liquidity to the book or execute market orders that take liquidity from the book. And we have different type of limit orders. We have the fixed price limit order, we have the Oracle price limit orders, and we have also a third queue. That's how it works, like 3 different queues that feed into the same order book. And this third queue can just provide quotes based on whatever market making strategy you want. So the first one we'll be launching very shortly now will be a simple XYK strategy, so similar to what you have on THORChain base layer. But one of the big plan is that we are going to roll out much more different strategies. We are going to have a Uniswap V3 style consolidated liquidity strategy. We'll have, of course, the virtualization strategy that will allow us to replicate the liquidity that is in the base layer pool into the app layers. That's a different market making strategy. We will also want to build some market making strategies that use those Oracle orders. So you can have all those different strategy, much more like differentiated risk profiles and how you manage your stock of assets, because at the end, making markets, that's what you do. You provide liquidity for a pair, and you have a stock of token A and token B, and it's up to you to manage your stock. When you are in XYK, the way you manage your stock is you always keep the constant product fixed at a K value, which means like you effectively always target to have 50-50 of each of the assets. Here we can have like a much more diversified set of views on the market and differentiated risk profile and differentiated return profiles. And all of this liquidity adds up and is matched into the order book. And the more different market making strategies that you have, the more activity you will be able to see in the order book, especially when you start to have strategies that trade once against another. And the more in general you add liquidity, the more you can facilitate volumes, and the more we can generate fees for Ruji and for THORChain. So with this distinction in mind, then what does Liquity do by being a market maker? Is simply use the tools provided by Rujira. So it becomes an LP in those various strategies. And for now, it will be just XYK, but going forward, it will be a much broader range. And Liquity has also acquired Rune, by the way, in the past few months, to also be able to provide liquidity in a base layer pool, if we wanted to. So there are a lot of different things we can do. And all those market making strategies, well, they generate a yield, and the yield is the #1 contributor of revenue to the DAO. Second one being the revenue we generate on the swap router. So that's just an important thing to understand what we mean by market making. It's on-chain market making, and it's using the tools provided by Rujira, which is Ruji Pools, which add liquidity to the order book Rujitrade. And you asked about arbitrage. Arbitrage is a different type of strategy. MantaDAO, sorry, Liquidy is not directly involved in doing any arbitrage, but it will be in two different ways. So one will be with the virtualization strategy that will allow us to replicate on the app layer the liquidity of the base layer pool. This strategy is effectively an arbitrage strategy. Everybody will be able to participate, and of course, Liquity will be one of the many users of this strategy, depositing single-sided tokens into a certain pool, and then making a market by providing effectively a bridge financing for just one period block time and taking a little spread versus what you would get on the base layer, and then having arbitrageurs that in the backend will execute the trade and rebalance the pool. And there is another way the Liquity is involved with arbitrage, and that's with the swap router. So the swap router, what Jan was explaining, is that it allows you to take, instead of being limited by token A and token B in a given pair, it allows you to trade any input token to any output token. And it does that by looking at all the different pairs in the order book and trying to find the optimal routes, and sometimes splitting this route between different pairs. And what it means is that effectively, whenever you have a route that give you a better return by splitting and going through a different set of pairs instead of just taking input token to output token in a given pair, what it does is it captures arbitrage that exists inside the order book. And that's another very cool stuff so Liquity does. Via its swap router, it allows anybody to optimize their trade execution by capturing arbitrage existing in the order book.
And just to add a bit, I mean, this all, if you're not familiar with this kind of stuff, it sounds very complicated and maybe way out of my league. And that's actually one thing that we would like to do with Liquity as well. We are going to democratize this. You don't have to know about all this. You can just invest in Liquity and you will be a really advanced DeFi user passively.
Well, that's why I want to kind of hash out the, make sure I understand the arbitrage part, because there's a lot of people in the THORChain community over the years who've been asking for some kind of arbitrage bot that people can invest in, and sounds like Liquity could be that solution.
No, sorry, it's not. Liquity use the tools. Liquity is not planning to build any arbitrage bots on their own. Like the arbitrage. So the arbitrage, the biggest arbitrage you are seeing on base layer pools is not really replicable just on the app layer, because what people do is they rebalance the base layer pools versus liquidity that exists on centralized exchange. As a DAO, as a 100% on-chain protocol, we cannot have trading accounts on centralized exchange and do those arbitrage. So that's not something Liquity can do. What will be available in terms of, because there are different arbitrage strategy. One will be the virtualization strategy, which Rujira is gonna use to create, to virtualize the liquidity of the base layer pool. And I mean, I think we have discussed that in another space. I don't want to dig too much into that, but we have documented it, and we'll do much more education when it's live. But this strategy is effectively an arbitrage strategy. Everybody will be able to deposit in those pools. So it will be democratized, not by Liquity, but by Rujira directly. And Liquity will be one of the player using the Rujira pool that offers this virtualization strategy, which is an arbitrage strategy. And what Jan was saying is that for people who don't even want to have to pick the pools and the strategy, because there will be over time more and more different strategies you can use to deposit assets on the app layer and generate a return by providing liquidity on the order book. Well, you can insert that just by Liquity token and let a team of very experienced community member take care of via governance mechanism, allocating this capital optimally to generate the yield.
So what about like you can't do any arbitrage with the other dexes? Like, you know, if there's any common tokens trading on THORChain versus any other dex, could you do any kind of arbitrage there?
So
that would be super complex to build as well if it's outside the base layer. Yeah, sorry,
Okay.
go ahead, PD.
Yeah, so I mean, the direction of Liquity DAO isn't really building bots or anything like that. Basically, you can think of it mostly like an investment holding business, and obviously we have this treasury and we deploy the treasury in a way to make revenue on that. So not really building bots or you know, anything, because that's a very, very competitive, arbitrage is a very competitive space. And it's very difficult to do in a decentralized way. So Liquity DAO is not trying to enter the arbitrage space. It's really just, you can think of it like an investment holding business, and it's a power user of the tools that will be available in the app layer. So, you know, like Pragmatic Monkey is mentioning, using the Rujira pools in the app layer to deploy liquidity to the order book. But also beyond that, I'm sure back on Rujira, we were actively using, you know, lending and liquidations and all sorts of stuff, just using the full toolkit available as a power user, essentially, to generate as much revenue as possible using the active treasury of the DAO.
Yeah, I am viewing Liquity like an investment holding company. But that's what I was getting at. That's what I was trying to understand, is that individual users don't have to set these things up on their own. They can just buy your token, get exposure to what you guys are doing. You're taking care of it all. And everyone else along for the ride, right? By holding your token.
Yeah,
Exactly.
100%.
And
along with that as well comes the next leg, that we are completely for transparency. I mean, we are going to have to rebuild, but we have an analytics tool set, transparency tool, so you can see exactly the positions, how they are making month by month. So we'll have all this transparency of the investments as well to build up confidence. I mean, for investors as well. So it's completely transparent what's happening behind the scenes as well.
So Liquity DAO, you don't have an actual legal entity. Like, do you have a Cayman Foundation or Switzerland Foundation or anything set up for it? Or no, it's strictly everything's on chain.
Everything's on chain. Yeah.
Oh, wow. Okay. Good for you guys.
There's not even like vested token schedules or anything like that. I mean, quite literally, the genesis of MantaDAO back on Rujira was just a pure airdrop to all stakers on Rujira, and so there's no vested team allocations. There's no genesis team or anything. It really was just a completely organic community engagement effort. So everything is done fully on chain. Even the websites that we have is actually pretty much a decentralized effort. It's basically created and then hosted on Akash using decentralized hosting and paid for directly by the DAO. So there's no, you know, we're trying to eliminate all the centralized points of failure and have you know, everything be completely on chain.
Oh, that's huge, guys. Because I don't know if you guys know, or anyone listening knows, but like I live in Cayman Islands, and the crypto scene here is pretty vibrant. And you know, Cayman is one of the top jurisdictions for people setting up foundations to launch a crypto project. And the foundation acts as like a legal entity. You don't have bank accounts, you know, centralized exchange accounts, all that kind of stuff. But like, you know, nobody owns it, you know, all that kind of stuff. but it's a way to kind of bridge the gap between TradFi and DeFi, or so that's the idea. But in my mind, it's really still just TradFi in the end, right? Like the only way to truly be decentralized is if you have no legal entity anywhere. So kudos to you guys for not going down that path.
Yeah, but what we try to do is having the TradFi sense in having financial reporting and being mature in that sense. We want to be profitable. We want to show how profitable we are, because since we are profitable, you can actually do, I mean, all the PE, PB measurements. How is the valuation? Not that that is the most important thing in crypto. That's mostly hype, but we will be providing all those numbers so you can actually see exactly how profitable your investment is and where it is at the moment. Basically minute by minute, since it's live, more or less live reporting.
So to kick a beat a dead horse, to bring it back to arbitrage, the reason you're not doing it is because you can't. It's technically not feasible. If it was technically feasible for you to do it, you might entertain it or look into it. But as it stands today, you actually can't really do any true arbitrage. You got to stick to market making.
I would say
not only market making, but online things that we can do in a decentralized ways. Because like you say, arbitrage, if you need a SEX account, you need to have a physical entity. That's a no-go.
Yeah, probably not branching into the SEX jurisdiction because of the centralized points of failure that would be required for that. But I will just say broadly, there's no direct limitation on the scope of what Liquity DAO can do or invest in. We do grants as well. We've done that before. For example, back on Rujira, MantaDAO at the time financed via grant the developments of a liquid staking token platform. So things like that, basically, because again, there's no Genesis team, there's no core structure with vested token schedules. So really anyone can come in if they have the technical ability to implement something and can present the idea to the DAO and say, you know, I want to request a grant to build some revenue generating product. Here's going to be the ROI on it for the DAO. And you know, the DAO votes on it. And if it seems lucrative, that's a direction that we can go in. So there's not really a limitation on the scope to just being an investment holding business in a decentralized way. That's really just kind of, that's the core. That's how we build up a moat, right? Is building up the treasury with the blue chip assets. But the scope isn't limited to that. And that's kind of what we're getting at also with the whole swap router that works through the Rujira order book. That's just another additional revenue generating piece that's separate or, you know, decoupled from the treasury itself, but it adds valuation and it allows us to, again, do capital raises at higher valuations and get even more treasury, which generates even more revenue.
So is the treasury, sorry, I was just trying to do some rough numbers in my head. You said at one point you're making 300 grand a month in good times and like 50 to 80 grand a month in like normal times. So is that that $1 million you're putting onto Rujira, is that like all your treasury, or do you have other monies squirreled away somewhere else? And if you've made more money than just the $1 million over the years, where has that gone? Have you like distributed to token holders or anything, or individual salaries? How does that all that work?
That's kind of exactly it. So so historically, actually, Manta at the time that was a pure revenue share token. So the revenue that's collected, it would be paid out to token holders. Now it gets a little bit tricky when we talk about revenue, right? Because again, at the peak, we had like 10 million in liquidity on Rujira, but that was basically half of that was paired up with Manta, or all of it was paired up with Manta. So half of it is the DAO's native token. We want to move away from that because it's very reflexive and it's also kind of intangible, right? Because if you make money denominated in Manta, you can't really realize profits on that unless you sell it. you know, in a very similar sense to how Rune behaves, right? If you're making all your money in Rune, well, the only way that you actually realize value on that is by selling it for something else. So I think we're gonna tighten up a bit on how we present and how we talk about revenue and calculate these metrics, because if we're saying 300,000 month over month revenue, great, but you know, half of that is in the DAO's native token at the time, and it might be in other intangible, or not intangible, but relatively illiquid assets, or it might be auto compounded into the liquidity that we're providing. So it's a little bit, I would say, of a gray area, but definitely something that's an area of focus for the relaunch is on basically optimizing the actual tangible revenue. We're kind of working on decoupling a lot of the treasury liquidity that's provided from the DAO's native token, Liquity, so that the profits can be immediately realized because they're in liquid assets. They're in USDC and Bitcoin and Ethereum and Solana when that's supported and so on. So highly liquid blue chip assets that can be readily shuffled around and deployed into other areas as needed, or used for grants of new revenue generating products and so on. So to just circle back to your question, what happens to all of the revenue that's been generated over time? Some of it is part of that treasury liquidity. Obviously, you know, we were market making with Bitcoin, which was Axelar bridged Bitcoin, Axelar bridged wrapped Bitcoin on Rujira. So part of it is just revenue that we've generated over the years. That's part of that 1 million. But also the majority of it was just harvested and then distributed to the token holders. So to bring that to another point, that's something that is an active area of discussion going forward for the relaunch, is how to best utilize all of the revenue that the DAO is collecting once it relaunches on Rujira and THORChain. Because actually, in my opinion, just giving away all of the revenue, especially when you're kind of in a high growth sort of startup phase, is not the most efficient way of doing it. So sort of the vision that I would like to drive, and again, this is all completely under the governance of the stakers of Liquity DAO, but the vision that I would like to drive is that basically collecting this tangible blue chip revenue on a monthly basis, and then proposing a plan on a monthly basis on how we're actually going to utilize that revenue. Because if the financial metrics largely coming from the treasury and from the revenue that's being generated by the treasury shows that the token is undervalued. So I throw out numbers of like, if the price to book ratio is less than a 2x multiple, and if the price to revenue or price to sales ratio is less than a 10x multiple, then we would consider that sufficiently undervalued, and we could actually use revenue to buy back the float from the open market. And so that would have the most direct impact on the valuation of the DAO token, using the real fundamental valuation of the whole thing, sort of the way that you would with a TradFi investment holding company. And that's just one example. So another example might be, depending on where we sort of are in the market cycle, it might make sense to take that revenue and reinvest it into acquisition of new blue chip digital assets. For example, maybe when Solana is finally launched on THORChain, so that functionality is there, we can start redirecting some, most, or even all of the revenue to acquiring Solana liquidity, and then we can market make in the Sol USDC book in the app layer. So I kind of, the vision that I want to drive forward is on a month-by-month basis, basically ratifying a plan through DAO governance on how we're going to be using the prior month's collected revenue. But the sort of the philosophy is always, how do we increase the valuation for all holders? How do we increase the net asset value of the DAO? How do we increase, the revenue streams and generate a profit for all of the holders of the token? So really with that in mind, thinking of growth over the long term and building a moat that is sustainable because I think we've seen that there's actually a lot of crypto products have sort of gone from being purely speculative with very little fundamental backing or utility, and now they're kind of shifting in the right direction of having some backing, but a lot of them are very, very linear and focused on just one thing, no matter what. And that one thing might be distributing all revenue to token holders, or there's other projects like Hyperliquid, they're just only doing token buybacks at any price. It doesn't matter what crazy insane multiple the token valuation is at compared to the actual revenue that they're generating. They just do one thing and ignore the actual valuation metrics that really should be guiding these decisions. So we want to be more of a, or at least I want to push the vision forward of being more dynamic and using real sort of TradFi equivalent metrics to guide these decisions on a month-by-month basis.
Yeah, and in addition, I mean, and to be able to do that in a lean way, we have all these analytics and all these data readily available for any community members. I mean, all the data is going to be there, so we can be very fast and efficient in the decision making. We will have the tool sets for it, or to be able to do that.
Yeah, and then the playbook is really. I love when PT used the comparison with a MicroStrategy, because that's at the end that's really what it is. Like Liquity is doing the MicroStrategy playbook. When you have those metrics, and whenever your token is undervalued, you just buy it back on low liquidity, push the price up. Whenever your token is overvalued, well, it's time to raise more capital, sell more. Whenever you raise by selling some of your token, every $1 you raise is gonna turn into $1 of treasury assets. It's done something that is unproductive into $1 of treasury asset that is productive, so generating revenue. And then you have this perpetual flywheel that is very powerful. Like assuming we don't invest in tokens that end up going to zero, so that's why we also want to stick to the blue chip mostly. Then you just keep increasing the quantity of assets you have making market over time, and assuming the yield, the average yield you get is constant, you just keep increasing your revenue and you get more and more firepower to rinse and repeat throughout the volatility of your own little token.
So Liquity obviously has its own token. Then you guys aren't merging with Rujira. Your token is staying separate.
Yeah, exactly. So we have the MANTA token that has been living on the Rujira blockchain that is going to be migrated over for one for a Liquity token.
And so it hasn't happened yet?
As soon as the Rujira trading pairs go live and we can provide a book, it is possible to do it, but there's nothing to do with the token at the moment. So, but we are just around the corner. So, and we're having the migration analytics ready, so we can see the flow once it really starts.
And will Mantra continue to exist on its own, or you're going to actually shut it down? What'll happen to Mantra?
No, there's not going to be. I mean, the way we made money was on the books, and we are moving all the business that we will be providing, and we are putting our money on the Rujira network. So I mean, we will have the migration open for a while, and then eventually we will just close that door as well to have a fixed supply of the token.
So anyone holding the Mantra token, you gotta try and reach out, find a way to contact everybody as best you can.
It's going to be for a year, so it's no hurry. It's no rush to do anything.
Yeah.
But there is an action needed to be taken to migrate over to the new blockchain.
And there won't be any decay, importantly. So it's a different mechanism. Like we have the tokens that are merging, so Kuji, Fusion, LBN, NSTK, and Wink. Those have like a 12-month decay period or 11-month decay period, and you merge, they disappear. It's a one-way process. The token on the source chain get burned, and you get a pro rata claim on Rujira. And then you get a token like Liquity. So we have 3 ecosystem token migrating, Liquidy, the former Manta, but also Auto, the former Rujira, and Nami from Nami protocol. And those one will be a similar process. It's a one-way bridge. You burn on the origin chain the token. A new token is minted on Rujira, on THORChain, and then that becomes your new native token. And for those tokens, like, there will be no decay, so people can do it whenever they want. But eventually, everybody who is following what's happening should be migrating, because staying on, like, it won't be any economic activity on Rujira going forward. Nobody's going to spend any time there from the teams, the project, matching things there. And eventually, assuming all validators stop validating the Rujira chain, it will be completely sunset. So yeah, everybody should, once the process starts, everybody should look to migrate their tokens.
Awesome.
And we'll make sure that this is sufficiently announced. It's going to be a very, very similar process to the Rujira merge. I think it's basically going to be built into the Rujira merge website. So I think that the Manta token holders are basically a subset of the Rujira community, so they should be well aware already. But we're going to make sure that that we spread the word far and wide that the Manta token should be migrated over to Rujira. As soon as all the applications start going live, we're going to be kicking off with seeding some liquidity over there, and announcing that the migration of Manta is open.
Okay, so in the last space, we had with an aspect of Rujira was Lavana. The question I asked back then was, is this something that integrators or various wallets or interfaces are listening to this space? Is this something that they can plug in, or is this system going to be compartmentalized in kind of its own separate thing? So if there was like interfaces and wallets, is there anything you would want them to know in this space?
So you mean related to Liquity, right?
Yeah. Yeah.
Not pairs. Yeah. So absolutely. So well, maybe Jan, you want to dig into that, the API and how we are, what our
Yeah,
plan
exactly. I think the big thing for external project is going to be when we will be launching our API, where you can actually utilize and any project, essentially. It's going to be an open API where you can just make a request. I want to go from token A to token B, and get basically a transaction you submit to the blockchain to just execute that. So that's going to be something potentially, where if you want to provide a simple swap interface or anything, the API we provide will be useful for them. And
it will be effectively the easiest way for any integrator to tap into the order book liquidity in the most flexible possible way. So from any token to any token with optimized execution via split routing.
Okay, and so who, if an integrator is listening to the recording or listening to this right now, who should they contact primarily? PM or Liquidity or Post PT? How they should begin that process?
Yeah, I think getting into the if Telegram or just on the Twitter account, I would be the one. I would think that would be helping out and guiding and explaining the process on how to do that. It's not going to be possible as of today. It will be, but we can certainly initiate discussions, and because the flow is there, we did it on Rujira. We just have to adapt it and make it available on Rujira. So we know the full process. So that could be in parallel if someone is interested.
Yeah.
Yeah, and so best place is probably start, because we are a DAO again, like just go to the main Liquidity DAO, mention your interest there, and then we can move into a private group if you need help with integration. And I think a cool stuff also to mention is the plans about having a referral fee and possibly an affiliate fee. So
okay,
similar...
You're releasing the alpha portion. I was.
Okay, no, sorry. Okay, no. So
no, but that's the thing.
No.
I think we are in an agreement that within the DAO as well, that we in order to boost the API as well, I mean, we all benefit. The more volume we provide, the better for the full ecosystem, essentially. So, I mean, previously, I mean, we were a win-win solution with the Rujira, where we were taking a fee and we were providing volume. Now we want to even share that piece with the ones integrating. So we are going to introduce an affiliate program as well. So it's going to be a win-win-win protocol instead of just a win-win for the Rujira Liquity.
See, guys, this is why you listen to the space, because Kenton and myself, we're good at squeezing the alpha out of these people, okay? So that's why. So, guys, please share the space if you haven't already done it, especially if you're listening to the recording. There's some really good information here. Kenton, I started talking a while ago. I thought you were going to say something. Was there something you wanted to add?
No, not at all. Please, you keep going. Carry the conversation for a bit.
Well, the thing that I think is important is that, you know, the interfaces, the wallets, especially with all these new Ruji primitives, they're going to be in an arms race with each other because they want to, you know, add these new 0 to 1s, essentially. I mean, the amount of innovation that's happening right now is truly mind-blowing. So, you know, this is a friendly little bit of advice for, you know, the various teams out there, because I know a lot of them are really hungry. I would message these guys. I would get involved and start building the relationships and the infrastructure right now, ready to go. This is something that's never existed before. I think you understand that. And particularly if there's a lot of new interfaces out there, if you want to stand out, I think that's how you do it. I think Kenton's questions have been very comprehensive, and I'm really thankful for him because his knowledge and breadth of these matters is greater than my own. So thank you, Kenton. Is there something else that you guys want to bring up that you don't think has been fleshed out as much, or anything else you want to cover?
No, I think we covered it, but I want to make very clear it's a two-sided. The participation into Liquity can be either a passive investor just wanting to take advantage of the full set of opportunities. You can just buy a token, have a power user of the Rujira networks, all available tools to maximize the profit. Or you can be an active member and really drive the space and innovate. And so, I mean, you have the full tools that you can participate in any way or at any level you would like personally. You can just buy the token, you can be deep down into the weeds in the Telegram chats and really doing business development and driving this exciting future we have ahead of us together. So we have the full spectrum available. So we welcome anyone interested to join us and chat in the groups, and we're open and want to have more people involved. And so it's
Yeah. You know, guys, we did the Raise the Bond campaign for a reason. We did that to give security to Rujira Network so that they're ready for like a springboard, ready to launch. Go straight to the moon, baby. And that's why we did that. Here we are. I think we've accomplished our goal. I think we're up to 115 nodes. So again, another call out to the THORChain audience that's going to be hearing this. I would bond your rune, not just because to add more security to the network, but we're up to 115 nodes, and I think we have 100, Kent, 121, 122 that are waiting to churn in. So bond your rune while you still can. That's the new message that I'm starting to say, because there might not be space available. And if you want to earn yield on your rune, especially with the shared revenue model, now's the time to do it. Go ahead, Kenton.
No, that's it. I was actually going to say, I know Pragmatic Monkey is probably his favorite subject to talk about security on THORChain. I want to get into it a little bit and talk about it. I've had some more, my thoughts have evolved over the last couple of weeks about it. Do you guys want to get into it? And I don't want to take from Liquity and what you guys, what you're doing. Do you want to talk about the security on THORChain and scaling it and scaling app layer? And I mean, it does affect liquidity in the end. You guys want to go down that,
yeah, of course,
that road?
Let's chat with that. I'm sure PT will also have interesting takes here. So.
Yeah, let's do it.
Well, are you guys, let me, I've actually been coming around to AutoStake's idea about the cold vaults versus and hot vaults, and what a part of what's reshaped my thinking is the whole debate Boone and JP had about the app layer, and if there's an exploit, should THORChain nodes intervene or not, and blah blah blah. And I've been thinking about it, and my stance on that, or my view, is that, well, the app layer is separate from the base layer, and there's no reason we can have hundreds of different Rujiras type thing, right? But we're just starting with Rujira for now, and I'm, as a node operator on THORChain, I'm thinking, it's not scalable to expect me to be policing all these different apps on app layer. That's what the devs who are creating them, that's what they're for. And so it's got me thinking, maybe kind of help keep app layer and base layer separate, is we do have this cold vault idea where there are individuals who hold keys to the vault, to separate vaults that hold secured assets. And it could be the individual developers for each app. They're the ones that can be trusted with, of some of the keys to the vaults on the secured assets that are being used in their smart contracts. And then the THORChain nodes has, one set of keys type thing. But the ultimate control is by the app layer devs. And so if there's an exploit on one of the smart contracts, it's actually the app layer devs who can decide, do we freeze this? Do we reverse it? What do we do? And it takes that onus off of the THORChain nodes, and kind of nullifies the whole debate of whether THORChain nodes should do anything, because they can't. They just have one key. They're part of the signing process, but they don't have control. And this would enable app layer to scale unlimited, because now it's the individual devs who really have control of the vaults. And everyone keeps saying, Hyperliquid, it's a 3 or 4 multi-sig, they've got billions in TVL, the market's happy with that, why can't we do that? Well, now you can. And then everyone is buyer beware on each one of these on the app layer. It's like, well, the devs are telling you what the security structure is, security stance on the keys, and if you want to participate, it's a free market, go right ahead. So I'm coming around to that idea. I don't know if you guys agree, disagree, poke any holes in that. You have your own thoughts.
So there are two things here. So first, there is a security budget with the AutoStack ID, and I'm absolutely no expert here, but I think, from what I understand from his idea, I think that's a good way to scale the security budget to allow us to onboard more secured assets on the app layer, especially for things like Bitcoin-based stablecoin or money market, where you will have effectively a lot of probably long-term locked collateral in the form of secured assets that don't need to move around very much. I think that AutoStack ID works very well. I'm not sure how this is implemented. You mentioned devs having keys. I think you need some people who are trusted to hold part of the key, but they cannot move all the funds around. So that's, I don't have a strong opinion there. This will need a discussion and who is holding those keys, but I suspect it has to be node operator. I'm not sure other people outside node operator can. But so that's one thing. And I think that's a very good thing that we need to explore to be able to scale the app layer. The other thing is about responsibility of who can pause or not pause contract and this type of stuff. So just a reminder that smart contract on the app layer can only do what anybody else can do. Like any normal user of THORChain, they have the exact same rights. There is no exception. There is nothing else. Then we could have a admin wallet that can potentially pause the smart contract, and I think that's it makes sense that also at our level, if we can, we should have those tools. I don't think, however, that I'm not sure we can. Again, I'm not a security expert, despite what you say. Far from that, but I'm not sure we can pause a contract just directly from the app layer, because again, we can only do what other normal wallet can do. So only the nodes have the option to pause via Mimir. Then on your concern, I think I understand is you don't want to have to monitor and read apps, and that makes total sense. I think most node operator would be in the same boat, but it doesn't hurt to provide just the tools. There are already 3 tools available. You can either pause So via mirror control, you can pause the entire app layer, or you can pause a specific smart contract, or you can pause all the smart contracts. Having the tools doesn't hurt anyone. Like then you don't need all the node operator. If somebody spots an issue and decide to pause and see what happened, I think the same way it's a good practice for whatever happened on the base layer. I don't see any hurt of having the same tools for node operators. They are already there. They are built in, and it doesn't mean that you have to use it if you don't want to. Like it's up to each node operator, but it makes total sense to have them. Like if it allows you to so at least for people who think like, oh, this is wrong and something should happen, having the option to pause, I think that like I don't see any downside of having that. I understand like the fear of, oh, it's a big overall, if it's my responsibility to monitor all that. I don't think that's how it would work. Like it's most likely people won't monitor, and most of the time it will be good, but one day something bad might happen, and that day some people will react and pause, and then we see.
So on the security topic, I think at a high level, so we don't want to regress from decentralized custody. I feel like the suggestion is regressing from decentralized custody. It's moving more closely towards how centralized exchanges function, and it kind of kills one of the main selling points of being on THORChain to begin with. Which the main selling point is that you have this 100+ node architecture doing this decentralized custody of native assets, critical native assets that you otherwise would not have the ability to have native custody because they don't support smart contracts. So like Bitcoin is the biggest example there. So that's basically the security service that THORChain provides, is that you have this 100+ node with rune bonds doing the decentralized custody of native assets. And that should go both ways. That should go for secured assets and for just base layer liquidity pools on THORChain. So I guess I'm not really, at first glance, without seeing any technical details of the implementation, I'm not seeing how that would be a good selling point for THORChain to move in the direction of more like 3 or 4 multi-sig custody, which is reminiscent of how centralized exchanges do it. So I just to hammer it home, I think that a huge selling point of what THORChain brings to the table is that you have this decentralized custody solution of native assets that do not have smart contracts otherwise to do anything like that. And that should go for secured assets in the app layer. I think there's a whole other separate topic on permissionless nature of the app layer. This is actually coincidentally a hot topic on Twitter just this morning. So the current plan, though, is that the app layer is going to launch completely permissioned. Only nodes can whitelist approved contracts or delegate authority of approved whitelisted deployer addresses. So I think it'll make more sense as Rujira actually rolls out. Maybe we shouldn't kind of put the cart before the horse. Let's sort of let everything launch and settle out for a bit, because it'll make more sense. Rujira is kind of just building this core, vertically integrated set of primitives, DeFi primitives, on top of THORChain, utilizing the secure assets of THORChain. I don't know if the vision years from now is going to be many Rujiras, or if it's going to consolidate. There's even talks of eventually pulling Rujira into THORChain. I think that this is kind of just discussions that are probably years out. And it'll make more sense as things launch and grow and stabilize and hit their equilibriums. But just as far as like the secured assets go, I think that really is the biggest selling point of what THORChain brings to the table, is decentralized custody of the native assets. And if you move to more of a multi-sig or move to something that's more centralized, you're kind of killing the main selling point of it.
Yeah, I agree with you. But what I'm stuck on is like, part of the argument for relaxing the hard cap on THORChain is that the node operators are more and more divorced from the rune price, from the, not owning any rune, and they're just using other people's rune to bond. And so the pickle my brain is in is, what's safer? You have like 100 anonymous people with no money at stake who could, in theory, steal all those L1 assets. And if they're truly anonymous, they can get away with it. Or is that safer than 4 people who are doxxed and doing a 3 or 4 multi-sig? Because being doxxed, you've got like some legal security, right? They can be harder for them to get away with it if they steal, because you can track them down. And so I'm kind of like, where's the line? Like how many anonymous nodes are honest? How many and will they stay? Maybe they're honest today, but will they be dishonest tomorrow? And if we do open the hard cap wide open, does that encourage a whole bunch of dishonest people to enter the network? Because there's a very low barrier to entry for them to, if they don't have to put up any money, they just have to raise rune. Maybe they can slowly, eventually attack the network. And like while they're building up their number of nodes, they're making money, right? They're earning fees. They're getting paid to basically attack the network. So that's where I'm stuck. I can't, I don't know how to reconcile that.
I mean, this is an
No, I
aspect that
think
I've been very vocal on Twitter, is that the more that you scale up the network, the more you increase the coordination cost of even pulling out such an attack. This is something that I've said to a lot of people, is that actually, to my knowledge, and I've asked, is there any examples that anyone can ever come up with? There has never been a proof of stake blockchain network that has suffered such an attack, where the existing validator set just decides to maliciously drain assets. Because it's not, THORChain is a little bit unique in the sense that there's this custody of native assets, but it's also not unique in the sense that there are a lot of blockchains. There's a lot of bridge provider blockchains, for example. You can just look at like the Axelar network that are also doing, bridge providers are custodying native assets using either threshold security or some form of like a validator multi-sig. And there has never been in the whole history of proof of stake blockchains, there's never been an example of this type of attack. And the reason why is not just because people haven't tried it, it's that the coordination effort as you scale these things up, if you think about it, if you have 100+ anonymous nodes, and they've been honest this whole time, and they've kind of been working very diligently for years and years and years, you could say theoretically it's technically possible. Theoretically the sun could teleport inside the earth and blow us all up, right? There's always a theoretical possibility of a lot of things happening, but the practicality of it is divorced from the philosophy. The coordination costs, and you get into this sort of gray area where a lot of nodes are pseudo anonymous. And actually that might be a selling point for kind of pulling back a little bit. The traditional way that Cosmos SDK proof of stake networks operate is that you don't have fully anonymous node addresses. It's actually more advertised, and you have basically a ranked validator set. If you go look at like the Cosmos hub secured by Atom, it's this big ranked validator set, and everything's public and competitive. And if you just kind of try to imagine the coordination costs of pulling out such an attack, and these validators are pseudo anonymous, so there would, if there was a large scale attack where like $1 billion worth of bridged liquidity was stolen, there absolutely would be ramifications for the scale of that attack. And so I think just to kind of round it out, if you think of the practicality of pulling off such an attack, and if it's like you know, it's a near zero chance of it actually being practical, and you know, the game theory of it just doesn't even make sense when you really get into those details. So I mean, my stance is that, like, yeah, technically you can think philosophically there's always a remote chance of something happening, but it's just like so close to zero that you, for all intents and purposes, you might as well consider it zero. And B, THORChain wouldn't even be the juiciest target. There's other proof of stake chains that have even more bridged capital in or you know, juicy targets that would want to get hit based on, if you look at the staked value compared to how much exogenous assets are deposited onto that chain. There's some examples. I always laugh and bring up, like, Gravity Bridge, for example. It's secured by, like, I don't know, $300,000, and it's got millions bridged into it, and that would be a juicy target way before THORChain. So it's like way down on the ladder in terms of what a malicious actor would actually want to target, you know, to pull off such an attack.
Well, let's use Gravity Bridge as an example, because that one, I just, like, why isn't North Korea taking $1 million, and, you know, got the majority of the validators in Gravity Bridge and taking that money? It'd be way easier than doing social engineering and, like, trying to hack into someone's computer and convince them to download a program. Like, why don't they just, like, they could just do it all like legally? Code is law. They could just, you know, why wouldn't they do that?
Yeah, because there's two ways that a proof of stake blockchain could suffer an attack. One is that the existing validator set sort of coordinates somehow behind the scenes, and then, you know, you get the 51%, or I guess it'd be 66% for Cosmos networks, but you have a coordination of the existing validator set to pull off an attack. The other way, which is what you're talking about now, is you have some new entity try to amass enough tokens to take 2/3 control of the network, and that has a whole other set of practical constraints. For Gravity Bridge, it's you can't buy enough tokens on the open market without sending the price to infinity in order to take 2/3 control of the network. So there's liquidity constraints of pulling off this attack, and that exists for THORChain as well. It's like okay, if you even had a 2-to-1 ratio of native assets custodied compared to the bonded value of all Rune bonded, even at a 2-to-1 ratio, if a malicious actor externally said, okay, I'm gonna, you know, I see a 2-to-1 ratio, I'm gonna buy out Rune and take 2/3 control of the network, you can easily see just how, due to liquidity constraints, the act of them trying to buy out enough Rune to pull off this attack would make it not economically feasible to do so in the first place because of liquidity constraints.
Well, I totally agree with you there. I think the idea of buying enough Rune to take over the network, it can't be done. I was thinking more along the lines of, like, me, right? I'm trying to get more nodes in the network. I'm trying to attract bond providers. You know, I'm not putting up the capital. I'm trying to get other people's Rune, and you know, people know me. I'm a known entity in THORChain ecosystem, and still, you know, I still struggle to try and get bond providers, right? So if somebody new, I agree, it'd be tough. But now I was thinking, well, what if they come in with like 0% operator fees, and it just becomes a race to the bottom? Every node operator is competing with each other in fees, and they can, you know, try and do that. But I agree with you. I think we're talking about, you know, the 5% chance probability, 1%, whatever it is, 0.1, right? We're talking about the tail end risk here. I agree that you know, generally speaking, is probably going to be quite impractical.
I think there is another thing that could be interesting to implement, taking for THORChain, taking example of more traditional proof of stake Cosmos chain. In those chains, whoever delegates can override the votes of the validators they delegate with, and that's also a very powerful mechanism to prevent a bad actor that is not using his capital. On THORChain, it's not possible. You have to trust your node operator to do the right thing. I think that could also be a way to reduce risk is to allow whoever bond with you to overwrite your decision. And I think it's probably like would be a big technical uplift to implement that, but it's how it works in the rest of the cosmos, and that's mitigates the risk you are mentioning.
Nice.
I think one of the things that I just keep thinking about in my mind is, you know, I hear the juxtaposition between THORChain and other protocols, but if, you know, everyone here, Rujira and THORChain, my protocol, whatever your cup of tea is, or maybe it's all three, I think it's becoming quite clear that what we're building here is truly revolutionary, and it's going to be extremely, extremely powerful. And so right now we can make the argument that, okay, like other ecosystems are more of a target than THORChain. But I really believe that if we accomplish what we're trying to accomplish, I think THORChain can become the target, right? And if you've got to think ahead of some time here, where we have privacy available on my protocol, we have DEX aggregation going between THORChain, you know, people going to Zcash, maybe we get some more privacy coins. We have an entire DeFi suite that's just exploding with activity. On Rujira, we have tons of swap volume. You know, this is a bull case, of course, but which is a hypothetical, right? Rune's going up, Ruji's going up. Everything is really, really well. This will be interpreted as a threat. And I agree with PT in the fact that it's very hard to imagine how they can successfully attack THORChain right now. But I just want everyone to keep in the back of your mind that do not take this for granted. And please, I think there is huge market premium, both THORChain, Rujira, my protocol, to be very defensive during this time, because we do have a period where things are looking relatively accommodating in some part of the world, but we still exist in a very hostile economic environment. And what we represent threatens literally everything. So I just want that to keep in the back of your minds. We're going to encounter problems together, whether maybe scaling security might be a problem. You know, no one's ever done anything like this before. We are the pioneers, all of us listening to this, everyone listening to this recording. So please, if issues arise, guys, I just encourage everyone, let's work together. Let's not throw haymakers on X, no crazy posts, okay? We're all figuring this out as we go along. And some of the smartest people up here, they're ultimately saying, like, I'm not sure what's going to happen, but we're all wargaming it in our mind. So yeah. Kenton, were you going to say something? I think I cut you off.
No, you're good. You're good. I just wanted to, yeah, I did have a kind of a question for PT. You mentioned the nodes being pseudonymous, and this is one thing. Like, if all the THORChain nodes were doxed, I'd have no problem. Open the floodgates, right? Because if everyone's doxed, it'd be very difficult to get away with it. And you know, my concern is people being anonymous and be able to get away with stuff. And I've had some people tell me, well, actually, there's, you know, it's very, like, no node on THORChain is truly anonymous. It'd be easy to figure them out. Can you answer that? Is that true or not? Like, is it, you know, just because you're anonymous on Twitter, does it mean you're anonymous to the authorities? Like, is it, if push came to shove, could every node operator on THORChain be discovered by the authorities if they really dug into it?
That would be a question. I mean, I'm not deep enough in the technical details of the, I guess, the node operator architecture on THORChain, but I mean, generally what you see with these Cosmos SDK proof of stake chains, you know, broadly, you know, THORChain originally being based on the Cosmos SDK as well, is that you have a mix. You really have a mixture of, I mean, if you just take Cosmos Hub as an example, you have some validators that are fully doxed. I mean, you have Coinbase as one of the top validators, for example. So it's another case where reality is more complex than the theory. Like in theory, depending on the level of OPSEC, you could, I mean, you could imagine some validator that does everything through mixers, so has no traceability back to centralized exchanges, and is using, I don't know, is using Tor in order to get access to Twitter so that there's no traceability back to their own IP addresses. There could be any range of, you know, immense levels of operational security, but the practicality of it is that that's just not how these things are. And you really, the validator sets for all these chains are a mixture of big and small and corporate and completely, you know, bare metal, independent people, everything in between, fully doxed and sort of pseudo anonymous, and you know, there's a lot of public faces, and there's private entities that are just providing their own capital and have like 100% commission to discourage other people from providing capital. So it's just a big mixture. And when you just think about it, in one sense, the theory is that, well, technically we don't know exactly what the composition is. There could be 50% of the validators are just some shadowy entity or organization, you know, plotting to take over. But I think the reality is that you have this big mixing pot of everything under the sun, public, private, doxed, pseudo-anonymous, and that just, the more that you scale this up, the more you scale up the validator set, the more that you increase the staked or bond value of these networks, the more difficult it is to actually pull off any of these attacks. I feel like it would only really be realistic, like a non-zero, everything's non-zero technically, but the only like realistic possibility of pulling off such an attack would be very, very early on, before widespread distribution and when the network is operating at a smaller scale. And even then, I don't think it's ever actually happened. So to what Patriot's saying, like, I think that yes, there's an immense opportunity for THORChain to grow and thrive. THORChain, Rujira, you know, all the deploying applications, including Liquity DAO, immense opportunity. And at the same time, the more that you scale these things up, the more difficult it becomes to pull off an attack. It's sort of like, you know, you think about the actual staked value on Ethereum is maybe smaller than a lot of people would expect compared to the market cap and compared to the amount of tokenized real world assets, including tokenized fiat like the US dollar. It's actually a small multiple. The staked value on Ethereum is a small is less than the total tokenized value of these real world assets. But it's just it's operating at such a size and at such a decentralization of the node operator set for Ethereum that the more you scale this up, it becomes increasingly difficult. Same thing applies to Bitcoin mining. You can imagine all these theoretical scenarios of, you know, what if China seizes mining operations or seizes the factory that makes the miners and quietly accumulates enough Bitcoin miners to take control and 51% attack the network. There's all these like theoretical possibilities, but the practicality of it, and as the asset valuation grows larger and larger, and you have more and more participants providing the security, the practicality of actually pulling it off decreases as these things scale up.
Yeah. I agree. I agree with you on the practicality stuff. I totally do. But I do want to push back a bit on use the Ethereum as an example. Like those RWAs, like US dollars or bonds or real estate, those aren't bearer assets. Like the TradFi can still stop those and freeze them. WBTC, the Bitcoin, fine, they can take that. Bitcoin is a bearer asset. They can, you know, so that's, you know, the one thing I push back on trying to compare to other L1s. They're not securing bearer assets like other crypto, whereas THORChain is. So the best comparisons we can make are the other bridges that are securing external assets to their own token, right? So I just, yeah, but I agree with you about the practicality. I think you're right. I think especially as THORChain continues to grow, you know, if we increase the number of nodes and everything, like it'll become harder and harder.
And it's also kind of a gray area, right? Because I mean, there are centralized assets on THORChain as well. Even if it's wrapped in kind of derivative, you still have USDC and USDT, and you have, you know, Coinbase wrapped in Bitcoin. All these things, in theory, like the deposit addresses that the nodes are securing on THORChain, those could be frozen by the asset issuer, at least in theory, right? If you had 50 million of USDC being drained from THORChain, that could all be frozen by Circle. So I mean, I feel like it just the big point that I'm really driving home is that the reality is very complex, and when you think about all the complexities, it just the probability of being able to actually pull off an attack in practice is vanishingly small. We throw out numbers like whole single digits of 1% or whatever. I think it's far closer to zero than that. It would be fractions of a fraction of a percent.
So it becomes like, I can't leave my house because I might get hit by a car, and you're just so paranoid about being hit by a car. It's like, well, yeah, that's possible, but I mean, what are the chances? And then, like, what do? You just stay in your house the rest of your life and just do nothing with your life and like be a prisoner? And like, you can't. You have to accept some risk. You have to leave your house. You have to go into the world and go do stuff. And
absolutely.
that's basically what you're saying, right?
You were also saying, so I think that's exactly the right analogy you use. And you were also saying that the more the network grow, the more difficult it become. We also have to think about it's like, instead of having this posture on security that is purely based on the spot value in the base layer pools, most people participate in this network, most node operators and bonders, I believe, because they believe in the future cash flows that this network can generate for them. And the more we remove constraint on growth and we allow the economic activities, economic ecosystem to flourish on top of THORChain, the more we grow the cash flows for node operators and bonders, and the more it also becomes difficult and unattractive to just short-term attack it and kill the golden egg goose, or whatever is the expression.
Yes, you guys, this has been a great conversation, guys. This is awesome. I wanted to add something, but I'm not going to, because we have a new speaker on the stage. A friend has returned. Familiar Cow, how's it going, man?
Yo, what's up? Patriot Sounds, Kenton, and yeah, Pragmatic Monkey and PostTenebras. Yeah, I actually super agree with everything that PostTenebras was saying. So I just wanted to chime in, because all the stuff he was saying, that's all the stuff that I think of when people talk about all the security budget stuff and just the potential of taking out trying to steal from THORChain at scale, basically. So I disagree with a lot of those points, and I just wanted to just throw that out there that yeah, I also agree that between liquidity concerns of there being not enough liquidity to go and do an attack yourself by buying a bunch of Rune, and I'm sure Kenton, you've experienced this, trying to get people to bond to your node. It's not difficult, but I wouldn't say it's exactly easy. And if you've accomplished pulling off more than a dozen, I'd be pretty surprised of doing that, which is probably which is lower than the minimum threshold you'd need to even take over one vault on the network. I just think that and that's you as a known person who's really put themselves out there to do that, and someone could find if things were to if you were to run off with a bunch of money, right? So I think that just the reality of the story of oh yeah, this anon comes in and just gets a ton of bond from the community. It's I just don't see where that's coming from. I don't think anyone's bonding millions of dollars without some kind of basic due diligence. And while it's maybe technically possible to do it with thousands of smaller holders, I just don't see the reality of that ever coming off the ground. I mean, you could spin up maybe a couple nodes using an anon handle, but once you're going you're talking about getting access to other people's money in the tens to hundreds of millions of dollars, that it just seems way too crazy of a scale to actually pull off. Really yeah, so you're either coming at it from the one angle of buy your own Rune, or you're coming at it the angle of use someone else's, and both of which just have so many coordination problems to actually come off of. And I'm glad people are still talking about this, but yeah, I think that the best way to the best thing to do is just scale up and out of it. I think that there's natural defenses that we could do, by let's say we had a more efficient TSS mechanism. like in GG20, we have to have smaller vaults just because it's a less efficient protocol. If we were to upgrade to another TSS protocol, and we get, so like in theory, let's say that there's only one vault on THORChain and every single node is the guardian of that one vault, then the network is as secure as the bottom 2/3 of the nodes that's there. Like as it is now, we do sharding, and you could possibly take one vault with like a ton of coordination and things. I still don't think it's like it seems too small of a target to even try to go after that, but it is possible. But let's say you had a more efficient protocol where you could just run every node into one vault and not really have to worry about sharding and things. Then you just have you need like 50, 60, 70 nodes to take it over, which just is so like infeasible that I think that could never happen. So like to me, just the best thing to think of is just like scaling up and out of it. Just seems like the best way to get out of this problem, which is why like obviously I was very I was vocal towards like getting the security budget, just solve that problem. Like it's a problem we create ourselves, we can solve it ourselves, and like yeah, we can just change, we can set the monetary policy for the network and we can scale ourselves out of it. So yeah, it's just my thoughts on it.
Yeah, I agree. I'm at the point now, I'm not worried about anonymous nodes coming into the network, buying enough rune to overtake the network, coordinating, getting into a certain Asgard, rugging something. I think we have outgrown that problem. The problem that comes to my mind, this is like, so I'm trying to think of why our system will fail, right? I don't like to think in terms of why we're going to succeed because there's innumerable variables that are bullish right now. I think everyone in here would agree. You're all here for this reason. The thing that I'm worried about, and the thing that I don't know, that I can't figure out, is the privacy element and the success element making a multi-state actor attack upon the node operators themselves. That's what I'm afraid of. I mean, you guys have to remember the power of a decentralized Binance that allows privacy to anybody, any nation, right? This is truly extraordinary. This is truly revolutionary. This is huge. And when I said earlier, like THORChain being a smaller target, yes, that is happenstance right now. But I think THORChain, my protocol, Rujira, we're poised to be the ultimate target, not just from a stance of like an economic attack, but from an attack that's trying to stop the emancipation of the world. I know this sounds maybe a little exaggerated, and maybe I'm giving a romanticizing this or embellishments, but this is how the game theory works in my mind. Just truly the power of what we've built here collectively is truly extraordinary. And at the point at which I will agree with all the people who are because I agree the economic attacks that you mentioned, I'm not too worried about those. My mind will be at ease when the world has capitulated and accepted privacy as being a human right. If that happens, I then at that point think we are in the clear.
Patriot, I agree with you. Like for me personally, my concern is privacy is going to be the ultimate battle. That's where we're going to have to fight. I don't think they're going to go down easily on that. And but I've been, just thinking about THORChain in particular. Like, forget a nation state attack. If we remove the caps, have more assets we're securing, we're going to have more. That means more activity, more yield to nodes. And if the nodes are constantly yielding like 20-25% or something like that, that's going to attract more bond, more nodes. So a good defense could just be a good offense, right? If we have consistently high yields on the nodes, we're going to get more people bonding and more nodes in the network, and help just secure it, right? And maybe maybe it's like, I've used this example before. If you're in your own hometown and you meet a girl who's like a 5 out of 10 and she's so fun, like, you're not going to cheat on your wife. But if you're like on a halfway around the world on a business trip, you meet a 10 who's like super funny and awesome and into you, maybe you do cheat on her, right? Like it's a spectrum of what you can get away with, and is the risk worth the reward. It could be the same on THORChain. Maybe if we think about relaxing the hard cap, it doesn't mean we instantly have $10 trillion on it. like, you know, maybe it only grows, maybe naturally only gets 3 or 4 times the size of the bond. And it's just not worth it. It just doesn't make sense to try and go through, because there's just not enough money there to steal type thing. And so coming back to your nation state attack, if we are having as much yield as possible, going, you know, juicing up those yield to nodes and have more nodes, more decentralization, that's how we thwart them off, right? It's the only way to fight a nation state is just more decentralization. And we need, the only way to get more decentralization on THORChain, we need more yield going to the nodes. That's the only way we're going to get more nodes. So how do we get more yield? We got to get more assets. We got to get more activity. We got to really relax the hard cap. Yeah.
Yeah, I would absolutely echo all of that. Fully agree. And I would even add furthermore, there's a couple of additional points. So one is the topic of related to something that we brought up before. Should the app layer end up being in a state of permissionless deployment? I would be a strong advocate to not do that, because if you leave it as a sort of walled garden permissioned app layer, then THORChain can enforce revenue share and can ensure that the app layer is providing essentially security through revenue share back to the base layer, and then you can just let it run and scale, right? More revenue will scale the security of the base layer. Another point, unrelated to that, but related to security, is that accessibility of bonding. I think right now there's kind of a lot of hurdles. Actually, it's quite difficult, and it's getting better, but it's still, compared to other proof of stake blockchains, it's quite difficult for retail to participate in being a bond provider. If you compare it to how all of the other Cosmos SDK chains work, it's very, very easy. People open up Kepler Wallet and just click on whomever they want. And it's people that they know, or, you know, it's basically businesses and providers. There's the whole list, you know, 100 plus validator sets for a lot of these Cosmos chains, and it's extremely easy for a huge amount of participants to provide their security in the form of staking. And just to echo everyone's points, the more that you scale this up, the harder it is to pull off any attacks. So you want as many distributed participants as possible to be participating in bond providing, and make it very accessible. And then, you know, to sort of compound off that, you want the THORChain app layer to be a permissioned, high quality, decentralized Binance, so that you can enforce revenue sharing back to the base layer. And then the economic activity scales the economic security of the base layer. And that's the recipe for like absolute success over the long run, in my opinion.
I think the only issue with that is there isn't actually a direct correlation between bond providers and security to the network. Like, just imagine the example of, like, someone adds, you know, 1 million bond, or, you know, let's just say less than that, like $100,000 worth of Rune as bond to a node. The network doesn't become $100,000 more or less secure. It really doesn't matter. The security comes just from whoever is operating the node. The bonders are what allows the node to become active, and, you know, lets it win the auction in order to become part of the active set. But the fact that there's more or less bond providers doesn't actually make the network more or less secure. It's really about the diversity of the node operators themselves. So it's only true as far as, like, more bond providers and being able to provide bond easier would let there become more diverse operators on the network. So, like, well, I generally agree that it's good to, you know, make it easier to bond the network. It also doesn't. It affects it in that those are our own rules that we've set, but it doesn't actually make the network any more or less secure. Adding, like, any individual bond provider, or, you know, it could actually make it easier to attack the network in, like, that economic attack vector that we're talking about. So, you know,
so that's true. We discussed that actually, I think, before you joined. That's true, because currently on THORChain, bonders don't have any rights. But there is another property that we could take from other Cosmos SDK chain, which is anybody that delegates with a validator can overwrite the bot of this validator. And if we could replicate that for THORChain, so anybody can overwrite their vote, and then their pro rata share is like their vote take over into the overall calculation of if something is gonna pass whatever is the threshold or not. Then suddenly you give like every time you add more people bonding, you give them they also have power, and then you decentralize effectively the network and you increase security.
Okay, so that actually does make sense for governance and for things like passing a vote or something. That actually does make sense. And I actually really do like that. But for the security of the funds itself, it doesn't matter because a node operator has a key share for it wouldn't actually matter whether whether that is in effect or not, because the node operator always has access to the key share, which is really what controls access to the the funds, which could be stolen. So while I actually think that's a great idea, and I would really like to see that for like governance and things, just because I think it just makes sense to be able to override a node operator for any given thing. It wouldn't actually affect the security of the funds of the network, because if you have a key share, you have a key share. It doesn't matter if someone can vote one way or the other on your node. If you have however many key shares you need to rug a vault, you could.
Okay, thanks. Yeah, I did not know that, so important clarification. Would still be super cool on the governance side.
Yeah, it's kind of it's generally true for literally any blockchain in existence, is that at the end of the day, regardless of decentralized voting or anything, if you somehow amass two-thirds control of the network, you are God. You can do anything. You could basically you could uprev to a different version that just steals everything on the network. So basically, if you control 2/3 of the network, you can do anything. It doesn't matter if other people can overwrite your voting or whatever. And that's generally true for just pretty much any proof of stake blockchain. The way that you increase the security of a proof of stake blockchain is by increasing the amount of operators and also increasing the distribution of the operators. And some chains also go through an effort to try and balance out or sort of publicize how the balance of stake is weighted to try to reach more of an equilibrium between the smallest compared to the largest. So there's a lot of different ways you can tackle it, but really what is required to make a proof of stake blockchain more secure is you just need more validators and a wider global distribution of the validators. That's kind of the goal for everyone.
Yeah, I agree. And I talked to during the Bitcoin conference in Las Vegas. I got a lot of time to talk with Alex from My Protocol and Orion. And I am thankful, because this is one thing I did mention. It's like, hey, maybe it's time, we're not there yet, but we need to start thinking about adding the capability for new node operators to come on. And just for anyone who's curious, this will take a little work. And maybe Cal, if you want to speak to this or not, I'm not an expert, but this is something that we can do, and it shouldn't be the most complicated thing in the world to go beyond 120 where we're at right now. So, and I think this is something we probably should start thinking about probably sooner rather than later, because I do agree with PT, increasing the amount of decentralization of this network, especially all over the world, and doing the efforts of these really wonderful node operators that we have. And for those guys who don't know, Runtard has been great in training new node operators. And so has Slambammer and AutoStake. This is a great initiative, guys. And if there's any validators out there listening, any node operators, I would encourage you, if there's space available, to maybe train one node operator and help this, because it makes the whole system stronger, guys. Because right now we're still in the moment of uncertainty. Due to how powerful our protocol can be, we need to make it more decentralized. So I totally agree with PT on that front. Someone else have anything else they want to add to that? This has been a really interesting conversation. And guys, I love doing this stuff. I love talking about this right now because I really want us all to drop any tribalistic notions of, THORChain, Rujira, My Protocol, Mocha, whatever. We're all in this together. Okay. And we're all going to build this together, and we're all going to figure this out together. Okay. We are going to do this. So that's why we're going to have spaces, hopefully every week. You know, I'm a pretty busy person, but I want to do these every week with Kenton and anyone else who wants to speak. I want constant communication, so everyone's in the loop. And you know, I encourage anyone to come up on stage if they have any concerns, comments, questions. Obviously, we want maximum transparency and maximum dialogue going forward. Does anyone have any? Oh, go ahead, Kenton.
Yeah, I was gonna say this. Thanks, guys. Conversations like this are really good for me. My brain works much better talking. You know, hashing things out, hearing what other people say, and trying to understand, you know, your points of view. That really does help. Thank you. I did want to kind of ask PT. You mentioned keeping the app layer permissioned so that we can, the base layer can ensure it gets fees. I'm curious on your thoughts on allowing permissioning competition to Rujira, or do you think each app, each dev team should kind of have a monopoly on its product? Yeah, what are your thoughts there?
Yeah, I mean, I'm going to be biased in this regard for probably obvious reasons, but I think in general, so I mean, just going back, I was kind of a class of 2019 Ethereum maxi, and then during the, you know, the 2020 2021 bull markets, I sort of branched out and discovered the Cosmos ecosystem and really latched onto the app chain thesis. And I loved the idea of the app chain thesis. Just generally, my sort of idea of where I think blockchain technology is going is that you're going to have this big interconnected mix of public and private and everything in between as far as the decentralization spectrum. All these different networks. Some will be permissioned walled gardens where the core application verticals are built by the blockchain developer themselves. Some of them are going to be completely open and permissionless, the way that Ethereum and Solana are, and you're going to have basically everything in between. So I don't think that there's like a right answer, generally speaking, for the correct architecture. I think that the correct architecture, or the way that the world is going to end up, is that you're just going to have this mix, and the market is going to basically figure it out. Sort of like how on the open internet you have all sorts of different providers and all sorts of different product developers and so on. Some are open source, some are closed source. There's everything in between, and basically the market is going to figure it out and find its equilibrium on where it wants things to go. Now, as it relates to THORChain specifically, you know, again, coming from the history, you know, Terra Luna, then following with Kujira, and now with Kujira's migration over to THORChain, I think it'll work best if the core verticals remain where you only have one application that serves a core vertical. You only have one order book, because then you get into fragmented liquidity, and you get into I don't think that competition in that sense will actually increase the economic value on THORChain. It might just kind of fragment things. I feel like the best outcome is that you have basically amazing core verticals, and hopefully that's what Rujira can provide. You know, these amazing core vertical DeFi applications that serve the purpose that the majority of users want, and do it very well, and there's not a need to fragment liquidity or have competitors. Now, there might be one-off cases. I think it's going to have to be looked at on a case-by-case basis. If there's something that another team comes in, they say, hey, we want to do the revenue share, we've built this application, and it does amazing things that aren't provided by the apps on Rujira, or maybe does something in a different way. I think that this is really going to come back to the THORChain node operators. They're going to have to make a decision on, is it going to provide enough economic benefit, of allowing this in and allowing the competition. Is going to kind of be on a case by case basis. I don't think that there's sort of a one size fits all answer for it, but at least for the time being, there aren't. Everyone's kind of fully on board with the Rujira DeFi launch, and we want to see those go live and see how it plays out. And I don't really think that there's going to be that much interest from completely external teams wanting to sort of encroach and try to compete, because there is also a steep entry barrier, right? You'll have to compete with the incumbent, and you'll have to share half your revenue to even be considered by the THORChain node operators for whitelisting. And you also have to undergo audits. And if it's an external team, they're going to be financing all of that themselves. Rujira is lucky to have basically replaced the old CEO and brought JP on board, and then brought in all these new investors, and you sort of have the whole thing. That's going to become an entry barrier for external teams that are trying to do the same thing and compete with the incumbent, which is Rujira after it launches.
Okay, cool. So you guys you'll naturally have a moat anyway. And because I kind of what I was why I was viewing app layers, kind of like how we have the front ends, the different wallets have THORChain in their back end, like Trust Wallet, Ledger, the Thor wallet, OKX wallet. Like I don't view them. Yeah, technically they're competing with each other, but I doubt anybody's switching from one wallet to another to go do swaps or whatever, right? I think they're just tapping into their existing audiences. And so that's kind of wondering, reviewing app layers, that, okay, Rujira, you guys have an audience, you have people, you're going to get users, it's going to be great, but maybe we should open it up for other teams to, even if they create the exact same product you guys have, but they're tapping into their audience and they're going to bring new users, new people. They're not taking anyone away from Rujira, but maybe they bring in a whole new community. And then that more activity, kind of like, it benefits the whole. We all benefit from it, and we're all growing the same pie. Yeah.
I think it's the other way around. You should see the app layer as an extension of THORChain. Like, it's another set of protocols that increase the quantity of things you can do. But then all those different front ends, they should look the same way they work with THORChain. They should look to work with the tool provided by Rujira, by the protocol on Rujira, to extend the product offering of their own local audience. And that's very much the model we have in mind. And I think that works much better than having like 20 different app layers competing on THORChain. And
so you envision other apps, wallets, even websites, whatever, to have like Rujira in the background, for lack of a better explanation. Okay.
And we want to replicate, so two things there. We want to replicate initially we wanted to replicate the affiliate model of THORChain to allow those front end to add fee on top of the fee we take, and we'll likely do that. But the more I've been thinking of it, the more I'm convinced what we need the most is a dual system of not just an affiliate that you charge on top, but also what I call a referral fee, which you take from your own revenue. And that allows us to serve all the different providers and front ends by without increasing the costs for the end user. That's put us in a great position to allow those integrators to come and scale and be competitive instead of having to add to effectively force their users to pay for the extra costs. So I mean, we will have the two models. I think that's very something we need to nail, and then we can like push out on getting all those integrators also extending their functionalities.
Yes, and that's how the game theory works in my mind as well, and that's why when we're going to have new protocols we do spaces with, I want to talk to the interfaces, the wallets that are already part of the ecosystem, is not to delay. I'm trying to throw you a bone. Get in touch with these guys and be one of the first to offer these primitives and start benefiting this, because this is a huge competitive advantage. And once you unlock this competitive advantage, other protocols, other interfaces, other wallets are going to see this, and it's only going to continue to grow the network. Okay. And so, yeah, there is the incentives are absolutely clear. And I'm really glad you highlighted that, PM. That was well said. All right, guys. So does anyone have anything else they want to share? We've been going on, we're approaching the 2-hour mark. I still have energy to go if you guys want, but if you think we've exhausted the topic, or if anyone else in the audience wants to come up and ask any questions, feel free to request. I think we had a really wide conversation so far today. I'm very pleased. I think we covered a lot of topics. But if anyone has an itch they want scratched, now's the time, please.
Yeah, so I will have to drop off at the top of the hour here. And I do want to just kind of circle back and provide some closing commentary. On the topic of the space, the relaunch of Liquity DAO on THORChain and Rujira. Really, this is going to be great. It's the whole intent is to be symbiotic. It's to get that flywheel going. Liquity DAO is going to be bringing and basically injecting and seeding blue chip liquidity into the app layer to get the engine rolling. And we're going to be doing capital raises. We're going to be power users of the whole Rujira DeFi suite, and generating gobs of revenue and increasing valuations and building that treasury. All of it is not extractive. It's not just for the benefit of the Liquity token holders. It's mutually beneficial. It's going to seed the liquidity. It's permanent, sticky liquidity. You don't have to throw incentives at it to keep it around. It's not mercenary liquidity. It's going to be there as long as Rujira lives and THORChain lives. And I'm sure we're also going to be branching out into the base layer pools as well, and all sorts of exotic tools as they're released as part of the whole app layer DeFi suite as well. So I think that it's going to be a beautiful symbiotic relationship to get that flywheel engine rolling, and push these things to the sky.
Yeah, I totally agree. And I think that was well said. PT, you're an excellent speaker, and you articulated the vision of Liquity very well. And I'm very happy. And I hope you come and do more spaces with us. You're a very knowledgeable person, and you seem to have a very good grasp of first principles. So I always admire people who think like you. Kenton, were you going to say something?
I would say hear, hear.
That's right. That's right, guys. Hear, hear indeed. Okay, guys, what do you think, Kenton? Go ahead, Liquity. Were you going to say something?
No, I was just going to second everything PT said. I mean, that's the thing. I mean, we are in a really symbiotic relationship. And so, I mean, I will not, he articulated it really well. So, and I have to drop off as well, but I'll hear we are closing off anyway. So,
yeah, we're losing.
I really thanks for hosting us and having us and giving us the opportunity to showcase us.
And thank you very much, guys, for taking the time to come up here. Kenton, looks like we're losing all our speakers here, which is normal. Hey, they stuck around for 2 hours. I appreciate your guys' time.
I got to go get going too. I think so. I think it's a good time to wrap it up.
Okay. There is something I want to do to close these spaces that's going to be pretty much unrelated to the topic, guys. There is something that is very important that's happened. We touched on this before, and that's the 0 to 1 that Maya Protocol has just done. Okay, they've released Zcash on their on Maya Protocol, and now for the first time ever, there is decentralized permissionless access to privacy. When I was walking around in BTC Las Vegas, with Alex, and we were talking to people about what we have accomplished, many did not know, and we spoke to some pretty popular, famous people about this, and they were surprised. Okay, so the word has not gotten out yet. Okay, but please understand that it's coming. And we did see a few days ago, I think it was like 8,000 ZEC be swapped for. Okay, these swaps are coming, and I think my protocol is poised to do very well. But this is going to come with problems, many of the things that we alluded to. Okay, we're going to have exploited funds go through Maya Protocol at some point. It's going to happen. It is what it is. I don't know when it's going to happen. I don't know if it's 3 months from now. I don't know if it's a month from now, a week, or maybe an hour after this space is done. It is going to happen. And there's one thing that I want to do up until this issue is resolved, is just put a reminder out to everybody. Okay, please be ready. Be ready. Be ready for Maya Protocol. Be ready to defend them, because they were not only there for us. If they attack Maya Protocol for privacy, it's an attack on all of us. Straight up, okay? The future of finance is literally being determined right now. And so I just want everyone to recognize the moment. You are part of like the greatest transformation ever in the history of finance. This is happening now. It's going to be solved right now. Okay. So you must all be ready and ready to rally the troops. And so I just want to go over briefly some things that they're probably going to say, some arguments. Okay. They're going to say, you know, like there's exploited funds going through. So we need to put a filter on THORChain, my protocol, whatever. Okay. This is a fallacy, guys. This is a fallacy. It's the ever-moving goalpost fallacy, because there is no way that you can, with Bifrost architecture, to prevent this from happening. Okay, you can put whatever filter you want. You can't stop it, especially with all the different DEX aggregation routes, the new addresses, with the mixers. Okay, there's no way to stop it. And they want to use this as an argument that never goes away, like there is exploited funds on the layer 1, so therefore we can never have a permissionless future. Fuck that. Fuck that. That's dumb. Okay. We're going to have permissionless. That's a stupid argument. Okay. They're going to say things like, you're helping the DPRK. You're helping North Korea. No. Excuse me. We are addressing the first principle problems that led to the exploits that the DPRK was able to pull off. Okay. We are fixing the problem. And that problem is centralized exchanges. That is the problem. They cannot, custodying other people's assets is always going to be a problem. And as long as we have this issue, it's always going to exist, this risk. And we've invented technology to help with this issue. You guys know Voltisig, right? Every problem that is being faced, this community, this surrounding ecosystem is trying to fix, okay? They will mention things like the $1.5 billion that was lost from Bybit, okay? Excuse me, that doesn't even come close to the government corruption that has happened in my own country. For those who don't know, my country, we're $37 trillion in debt. $37 trillion. What's a trillion? It's 1,000 billion. Yeah, we got 37 groups of those. So 1.5 billion relative to that is insane. And you want to talk about what they did with this money? Don't let these morons moralize to you. Don't let them co-opt the narrative of being the good guy. Don't let them own the good intentioned reasons and the morality narrative, okay? You know, we've been funding both sides of various conflicts all over the world, both sides, okay? We get pallets of cash going to our enemies and friends of like, all to feed the military industrial complex. I have people I know personally in Border Patrol that know that the government itself, my government, actively gives weapons to the cartel. It gets paid under the table. Or they facilitate the sexual trafficking of children across the border, not only as a means to, as like a false parent to get them in, but then after that, they make a little extra money by passing them around from guy to guy. It's sick. It's evil, okay? Don't let these monsters moralize you. What we're building here is right. It is right and is necessary to free the world. Privacy is necessary. It's a human right. KYC means kill your customer. You've all seen the Coinbase data leak, okay? And the various violence that's happening to innocent people. Obfuscating your wealth is crucial. And wanting privacy for yourself is in no way, does it mean that you are interested in committing crimes. No, seeking privacy is your best defense against your own government wanting to commit crimes against you. So guys, these are just some of the arguments. Many of you in here are smarter than myself. You know the arguments. Please be ready, okay? I need your help. We all need to be together. This is coming. I don't know when, but it's going to happen. So just as a parting thought for everyone, when my protocol comes under scrutiny from you know who, you know the accounts are going to do this, rally the troops, get involved, and fight back. Because my protocol was there for us, we're going to be there for them. Anyway, that's what I got.
Patriot sounds, how do you really feel?
Oh, man. Yeah, I get wound up. Let me tell you, brother. This is very important, guys. This is so important. And you guys all know that. Thank you so much. This has been a great space. I'm going to keep reminding people to do this. Be ready, boys and girls. Okay, we wrap it up there, Kenton?
That's great. Yeah. Thanks, guys. Thank you, everyone. And I got your back, my protocol.
Damn right. Cacao Swap, I see you in the audience. We got you. We got you.
Yeah. And trying to think how to bring this around Liquity. Well, welcome to the THORChain app layer, guys. Looking forward to seeing what you do there.
Yeah, thanks a lot. And we will try to showcase Rujira's all possibilities and how they can be used and simplified for those who don't want to use them themselves.
Yep, appreciate it, and thanks for having us on.
Hey, thank you guys. Thank you, Pragmatic Monkey, PT, and Liquidity. Thank you so much. Kenton, you are a baller as always. Guys, I hope you've enjoyed this space. Please share it if you're just exiting now, listening to the recording. Give a fancy tag. We need to raise awareness of what we're building here. If you want this protocol, what we're building to be successful, please share the message. It's ours to win. So let's win. That's what I say. Let's win. Okay, guys.
Right on, guys. All right, take care.
Bye, everybody.
Yeah, thanks. Bye.
Bye.